Hello, future millionaires. This is Aztec, and this is the CSC. Lately, I've tried to make videos about where I think this space is headed. What are the big players doing? Smart money. What are they doing to create a future for this space? Do they believe there's a future in this space? But today, I want to talk about, are they relevant? Will they continue to be relevant? These big players like banks, institutions, that are trying to come into this space, big tech companies like Facebook, are they in the dying throes of their existence, or do they really have substance? Will they create a better future for this space? Will they hamper it? We're just going to kind of hash this out. I also want to go ahead and talk about some things here on the charts that I'm seeing. A lot of people are, trying to figure out where we are, where we're going, and we're really in a very interesting, in my opinion, uncharted territory. So I'll talk about some things that people are not talking about today. We're going to talk about the shorts chart. We'll also talk about why Bitcoin is actually showing a lot of strength, especially because we've hit a current indicator that historically has always, made us fall hard. And we haven't. So we're going to go ahead and talk about all that. But first I want to go ahead and talk about the overall theme of this video, which is the big players moving into this space and the different mentalities behind these moves that are happening. Are they needed or are they not? So here we go. The first article, like always, I try to source everything I talk about, and I breeze through things. I understand that, but they'll be sourced down in the description for your own viewing if you care to. So let's get into it. This article is actually from U.Today, and they're talking to the Circle CEO. Now, he's talking about Facebook coin, and Facebook coin has definitely got a lot of people excited. And, there's kind of people on both sides of the fence, but here, the Circle CEO says Facebook coin has been one of the hottest topics in the cryptocurrency industry as of recently, with very polarizing opinions. Allier, whose company issued the dollar peg USDC stablecoin, claims that it's a great sign that such companies as Facebook are interested in issuing their own digital asset. So he is kind of saying in a way that, Facebook is validating the space. It's neat to see them here. However, he claims that their consortium strategy with Coinbase will allow them to gain an edge over competitors. He also emphasized that a cryptocurrency shouldn't be simply used as a means of payment. It should be part of a much broader infrastructure. And you guys all know Cardano is my favorite project. That last part of this paragraph really makes me think of Cardano. It shouldn't just be used for payment. It should be part of a much broader infrastructure. As you know, Cardano is creating an ecosystem, and a lot of this will start happening after smart contracts towards the end of this year. But anyways, I digress. Here you have a big player in the space. You have the Circle CEO. And he is saying, hey, Facebook's coming. That's great. They're validating the space. But he's saying he thinks that, with his deal with Coinbase, they'll be able to compete against Facebook. So you kind of see one mentality here so far. That's, great. Thanks, you're here. But we're going to compete against you guys. So it's very interesting to see that Facebook is moving into the space. From what I've read, basically they're looking to use their currency, and they're looking to actually create this currency and have it up and ready towards the middle of this year. So look out for that. More news regarding this coin, but they're looking to use their currency between their marketplace for buying and selling of used or new objects, I guess. Most of the marketplace has used objects from what I can see. So that's interesting. And of course this mentality is just one of them here. Now, another article that I have is from CCN, and they're talking about Coinbase's CEO, Brian Armstrong. Now, this article is a little negative, but I'm not here to really talk about the negative parts in this article. I will read a couple parts here, though, that are interesting, just kind of news related, and then I'll tell you why this is interesting. Now, it says here, Coinbase has good intentions for the fee overhaul, saying it will further optimize the market health of our platform. They further expect it to bolster liquidity, improve price discovery, and create smoother price movements. The unintended consequences, however, suggest that it might not be worth it. Here's a glimpse into the new tiered structure, reflecting the addition of maker fees for the first 4 tiers versus 0 maker fees in their current model. So they're structuring their maker and taker fees differently, and you can go ahead and pause this video to look at this. This is actually really interesting. Now, here the article says, if Kruger is right, the majority of Coinbase's customers will fall within the first tier of trading, less than $100,000. Most people I know that are on Coinbase don't have more than $100,000 on Coinbase, so that would be the first tier. And to continue, it says, which, as he describes, is subsidizing larger clients. What's to stop smaller traders from exiting Coinbase Pro and moving to a cheaper exchange, boasting even more trading pairs, such as Binance, where the top tier $100,000 to $400,000 combined fees are half that of Coinbase. Now, this is really interesting that they're trying to do this. Now, why are they doing this? This article says, in the glass half full view, the changes could still result in Coinbase's desired outcome of greater liquidity if the largest tier of investors increase their trading volumes. Coinbase has also lowered taker fees, which is a plus. So what they're basically doing is they're restructuring their fees to bring in larger tier investors. So again, in a way, this might not be, Facebook or a bank that's coming to this space, but here's Coinbase trying to bring in larger tier investors, people with more money. They could be hedge funds or, what have you, or just big investors with, hundreds of thousands of dollars, maybe millions of dollars to invest. And they're doing this by structuring the fees differently. So here you go, another big player in our space, and they're trying to bring heavy hitters in. So in this case, they're not necessarily trying to compete with a big player, but they're trying to bring, bigger people in. So this is interesting. Here's another big player making moves behind the scenes. And I think it's crazy because a lot of people really aren't talking about this structure change. Anyways, another article here. This is from Crypto Globe. It's titled, Citigroup reportedly abandoning plans to launch its own cryptocurrency, Citicoin. Now, this article talks about, this coin and how it supposedly is not going to happen anymore. And the sources that say that this coin, Citibank, basically is backing out. They're not going to create their coin. But technically, that's incorrect. A lot of the news that you've heard about this is incorrect. And they actually say at the very end of this article, it says, however, Citi is not giving up on blockchain technology, in particular, continuing to explore its use for trade finance. Now, this is a quote from someone in Citibank, and it says, our focus is currently more in the trade space and trade finance and trade letters of credit. We are experimenting with this technology, but probably we are a little bit reserved when it comes to making bold public announcements. So, basically the news behind Citibank is kind of all over the place, but essentially Citibank is still in the laboratory constructing something to be a part of this space. and they're saying their focus is not necessarily like JPM coin, where it's going to be used between their own investors in the bank. It's going to be used for trade finance. So just to kind of give you an idea of what trade finance is, I brought this little graph up. It says trade and stock finance. Now it shows here, number one, borrower agrees to purchase the frozen fish from the supplier. So here's the borrower and here's the supplier. So the borrower is buying the good, and borrower agrees terms with funder, and funder pays the supplier upon shipment of frozen fish. So this exchange here, and then the funder's paying the supplier. It says goods are shipped to a warehouse and stored there. So this is the warehouse from the borrower. And then it says goods are sold to supermarkets who get a receivable finance line from the funder. Supermarket pays the borrower who repays funder on due date. So essentially you can kind of look at this for yourself. Pause the video again. This is actually really interesting because this is what Citibank actually wants to do. They want to create some type of blockchain technology that would make this space roll smoother, or basically be able to use that technology to make money in this space. Of course, you guys know that this type of technology can revolutionize and cut costs in all different types of ways. But this is really interesting. On a side note, the reason I brought this up is because if, I'm a Cardano guy, if you are looking to create a project out there, a lot of people in different telegrams and different forums are asking, what can I create? Well, Cardano is partially being created for fintech, to revolutionize fintech. And, here you go. I mean, this is an idea of something that you can create and build upon Cardano, something in trade finance. There's so many different types. When people think fintech, they just think bank. And, here you go, you put money in and you pull it out and you buy, use a card. But there, fintech is such a broad category. So there's a lot of different types of things that you can build. But essentially, Citigroup is still in this space. They're still creating. They're not leaving the space. So that's really interesting. Big players are making moves still. So this is just news of the big players making moves, essentially. Now, I think it is interesting that they are doing this. You also have like JPM coin coming in, trying to create a currency that will be used within their own bank. But now let's get to kind of like an opposing viewpoint. Now, this is a paragraph of statements that Charles Hoskinson made, and I actually will post this video in the description down below for you guys because I thought it was very eye-opening. Personally, I agree with Charles Hoskinson on what he said, and I'm aware of what he's talking about, but I don't think a lot of people understand this, so I'm bringing it up. And this is basically a kind of a different viewpoint, with these big players that are moving in. Do we need them? Are they needed? And this is a different opinion here, and this is from Charles Hoskinson. He was at the Hybrid Summit, and he had some very influential people there with him. He had Thomas Lee from Fundstrat sitting right next to him, and some other interesting people over here from Everpedia and Blockchain Quantum Impact. But you can kind of see where he starts talking about what I'm going to show you at around 17 minutes. Now, what he said is this here. Just using this site, it's fxstreet.com, and it's talking about what he said about JP Morgan coin. Now he says, I saw the JP Morgan coin, and listen, you guys don't get this space. You don't know how any of these things work. It's an abomination of a concept. First, they are the Federal Reserve. They run the old damn show. Them and 5 or 6 other entities, and there's absolutely no need or utility behind what they have created. It's just a proof of concept for the sake of being a proof of concept, to say that they're in the space and they can justify some sort of bizarre executive fantasy. The whole reason we exist is because these guys are criminals. It's true. They've done horrible things over the last few decades. They've bankrupted the world. They've excluded 3 billion people from the world financial systems as a consequence of their regulations and the systems they've put into play. And the whole world is living the consequences of their maleficence and poor decisions. And also, as a counter reaction, cryptocurrency exists and it continues to grow, and it will continue to gain relevance, and eventually it will collide with the legacy system. But I see these things as the last vestiges of a dying industry trying to achieve some form of relevance, and I have very little respect for this type of work. I don't see it as a positive thing. Go get them, Charles. I mean, I definitely identify with these statements. With how JP Morgan, or really Chase Bank, which they own, kind of manipulated the housing bubble, and in so many other things. I don't want to get too far into this, but I mean, essentially, if you do your homework, you'll notice that banks make it hard for the people, and that cryptocurrency is giving power to the people. Not to mention that projects like Cardano are trying to bank the unbanked, people that are left out. An example, Cardano is trying to create projects and use their technology in Africa, where a lot of people are unbanked. So, attaboy, Charles Hoskinson. And this would be an example of a different type of mentality. Right next to Charles Hoskinson in this video, right before 17 minutes, you actually have this guy from Investor Everpedia, and his name is Sam Kazmanian. Now, basically, he actually was kind of saying, hey, people like JP Morgan, when they create JPM coin, they're actually validating the space. And in a sense, I understand where people are coming from. These guys are the status quo. They are kind of validating the space, but why are they doing that? Why are all of these big players getting in now? Because they understand that they have a lot to lose and a lot of competition down the road. That everything that you see in this world, well, not everything, but many things can be revolutionized. Blockchain truly is, like I've said before, this is the 4.0 industrial revolution. So this is an exciting space to be in, because you are seeing these big players trying to jump in. And here you go, you have many people that believe that it's great that they're jumping in, and then you have people that also see that, hey, we don't need them, and hey, great they're here, but we're going to compete against them and beat them, or hey, really we don't like you, and you guys are criminals essentially, and what we're creating is the future. So I actually agree with that type of statement. I think that we are in this space. There is hope. There is a future in this space. It will be a future that I don't think very many people can truly see right now. I think that the types of ways that our whole world will be revolutionized, you can't fathom it in total just yet. But 10, 20 years down the road, you'll see it. So yeah, guys, I mean, tell me what you think. Do we need these big players? Are you happy to see them here? Do you care? Tell me what you think down below. I'm interested to see what you guys think. Now, let's go ahead and get into some charts here. My Telegram is going off here. Now, this chart is the BTC USD shorts chart, and as you can see, if we zoom out, we are in an interesting place. Technically, shorts are lower than they have been in a while, but what is interesting is that they are hitting this resistance line that is very significant. Also, shorts have gained some movement. I guess if you look at this candle here, because these are daily candles. This is from the 6th of March. Let's go ahead and take our price range tool. You can see that roughly shorts are up about 29%. So within a couple weeks here, shorts have risen dramatically, in my opinion. So we could, what's important here is that we actually could see a short squeeze, especially if the markets are flipping. This is a good space. There's this resistance line. Shorts have gained dramatically here. So you could see a short squeeze. That's something to look out for. And now a lot of people are pointing this out because they just see, that shorts are lower than they have been in the past. And that's true, but they've also gained recently, and anytime you see something like this, things can't just go up forever, as people say. So you could see a squeeze of sorts. Now, if that squeeze was to happen, if we'd go ahead and take a look at our Bitcoin chart, let's go ahead and zoom into current price action. Look where we're at, guys. We're butted up against some extreme resistance. This is the daily chart. We have this green line, which you may not be able to see too well, but it's essentially right here. And that green line is the 100 exponential. Now, this is huge, guys, because we haven't been able to break past this 100 exponential for a very long time. Here you can see right over here, this daily candle moved above it, and then the next day we dramatically fell. And I think it's very interesting because here we've butted up against that 100 exponential many times in this last couple of days, and we're actually just kind of consolidating, moving sideways, butting up against it, and we're not moving down. Now, let's go ahead and zoom out. Let's look at this 100 exponential. If we can get this to zoom in. Let's see here. Here you can see, we'll go ahead and zoom in right here. This was on November 7th. We came up and we got close to it, and we basically broke down. Let's look for another instance here. My chart is a little laggy right now, so I apologize for that. But if you also look over here, all the way back in September, let's go ahead and zoom in on this portion. You can see that we broke above this 100 exponential, and this is back in September of 2018, and we actually got a very large candle down after we basically hit it, kind of went above it. So this is interesting, guys. You can see again here that this line is heavy resistance and that it's very hard to break above it or keep above it for very long. If we zoom out again, you can see that right over here, so this is where we were in September. Right over here in July, we broke above it slightly, and then we came down. And technically, on this structure here, you can see that we moved up. We kind of moved from $6,128 up to let's see, roughly $8,350, and we actually had a greater movement down after passing this exponential. And again, you can see this exponential creating some resistance here, and also being hard to create higher highs above this, or movements above it, and for a substantial amount of time. This is only a couple days here, about a week above it, and then a large breakdown past it. Here's the structure moving up, and then kind of almost double a structure down. So this exponential moving average shows you here that it's created a lot of resistance, but here we are today, and let's go ahead and just zoom in all the way. And again, I apologize, this my trading view is lagging. Let's go ahead and zoom in a little bit more. Here you can see this green line right here, and you can see that we butted up against it, wicked down underneath it. We came up, tried to test it again, wicked down. We came up, we kind of broke above the 100 exponential and then broke down and closed below it. Again, here we are trying to come up today and meet it, and again finding resistance. So it's very interesting because what we're looking at is that we're actually fighting this resistance, and we keep trying to break above it. And in such a bearish macro, I guess, market, if we look at this from macro point of view, we've been falling for over a year now, and here we are actually trying to buck this trend. Now, if you have a short squeeze, guess what that means? We go above this 100 exponential. You have this MACD suggesting that there is buying pressure. It is slowly subsiding. As you can see, the histogram here is turning white. But we are above the zero line still, and we are crossed above this signal on this MACD. The RSI has cooled down. We're sitting at 61 currently. So there's room to still push up, though we may need some type of correction soon. But will we get it? Will we get it with the shorts building up, with a short squeeze impending, with so many people moving into this space? The overall sentiment is growing more bullish day by day. We have hit a very low low. The Bitcoin cash wars wrecked this space, this market. I think faster than what we were supposed to see. We're in a very interesting, uncharted territory. But what I'm saying is that we are seeing some bullish indicators here, because if we break above this 100 exponential, that is very bullish, because it is posed to be such a hard resistance, and there's a lot of things that could put us above this this resistance here. And there's a lot of resistance here. I mean, there's major trend lines right here. We're in this symmetrical triangle here. I mean, to see the symmetrical triangle, I'd have to zoom in a little bit. I mean, we can go to a 4-hour chart to take a look. But even on the 4-hour, if you look, we're in this symmetrical triangle, but we're above the 21 exponential here on the 4-hour. The RSI has cooled off, and there is selling pressure, but it's subsiding. So even this looks like the market would like to move up. And I think that the market does want to move up. It wants to break past this. We've had so much sell pressure for so long that we need some kind of recovery. And I'm not saying that we haven't hit the bottom, but this is, if there's a place to make a case that we have room to grow, to make a better recovery, to see 4,500, to see $5,200 for Bitcoin, this is a really good spot. But it's also a really good spot to see us move down significantly, just like we have historically. The thing is that we are in a very different spot. We definitely are, because we've been moving down for so long. The indicators suggest that we want to move up, and we're trending very well against this resistance here, as you can see, instead of breaking down as we have in the past so easily. So there's definitely different points to make. I personally think that we're going to move up. I just, I believe more in the cases that suggest that Bitcoin wants to make some type of recovery. Again, I'm not saying we've hit the bottom. Just because we make a recovery, even up to $5,200, doesn't mean that we can't see what a lot of people think hasn't happened yet, which is capitulation. If you hit $5,200 for Bitcoin, you could capitulate all the way down to, I don't know, low 2000s for Bitcoin, what have you, high 2000s, and that would, you can create capitulation at that point. But there's also points to make that we could have hit bottom. There's points to make that we are going to move up past this significant resistance that we're at. So again, question for you guys: what do you think? Are we moving up or are we moving down? What are you seeing on these charts? Tell me what you think. But yeah, guys, that's what I wanted to talk about today. I think it's really interesting. There's a lot of big movers moving into this space, a lot of different types of mentalities. Some people are, happy they're here, validating the space, and then there's some people that think that it doesn't really matter. We're going to compete against them. It's great, but we're gonna beat them. Some people are really against like banks coming in. They really don't care. They think they're doing it wrong. It's just pointless that they're even trying because banks they're not the future. Well, at least the status quo banks that we have currently. So it's very interesting. A lot of things are happening, and this is definitely a war zone. But you can see that there is definitely a future because the big players are jumping in. They want to make money. They see that there's a lot of money to be made because they're pouring in millions and billions of dollars in the infrastructure of blockchain technology. So there's definitely a future. There can be, is what I'm saying. So yeah, a lot to think about. I hope I have made you think today and realize that there is, so much happening in this space. But until next time, never give up on the future of money. Take it easy, guys.